because quant indicators day before yesterday were showing extreme fear and there was a chance that it could be a bounce back. And we've seen it's not a material bounce back, but a bounce back nevertheless. For the banks, in some cases, a lot more. Even at the broader end of the spectrum, I think the breadth is looking extremely positive. So if you look at the mid-cap and the small-cap end, the mid-cap 100 index up about 1%. The market breadth, clearly 5:2 or thereabouts in favor of the advances. And the small cap index too has done well. In fact, if you can pull up the small cap rate and then pull up the intraday chart of the small cap index as well, 161 points, 1.09% higher. And I think it's a bit of a, how do I say, a positively trending day for the mid cap and the small cap end of the market. So that is what is pretty heartening. Look at this. It's kind of stayed stable, and currently the Nifty small cap 250 just about trading at the highest point of the day where it was. Now bring up the heat map and let's talk about the large caps first. Hersh will speak about the mid caps. M&M at 7% is really ruling the roost. Extremely strong showing. We should show to the viewers that we have M&M coming in at 3 p.m. because viewers, you should stay tuned for that conversation. At 3 p.m. Anish Shah will talk to us about what's led to the kind of performance. More importantly, the confidence that the brokerages have on the outlook for Mahindra & Mahindra. So that is the top gainer. But oil and gas as a space and power as a space, I think deserve a mention. All of them have done really well for itself. Large cap, mid cap, small cap. I'm highlighting the large caps. Harsh will speak about the broader end of the spectrum. But BPCL and ONGC at the Nifty end. And then there is NTPC and Power Grid also doing well. So a bit of a resurgence for the PSUs as well. What's not done well? Apollo Hospital is down about a couple of percentage points. Axis is a bit of a lone star in the banking space, which is sulking so much, about 2% lower. So that is a bit weak. And FMCG has had a very weak day. HUL, ITC, Britannia, Nestle, all of them in the red. And the broader end too, we've seen some pressure there. Harsh, what is it that you're spotting at the broader end of the spectrum?
Well, earnings continue to be in focus, Niraj, and that's been the trend, and those are some of the stocks that I'll try to cover first off. Let's pull up something like a Muthoot, let's pull up Gateway Distriparks, let's pull up ABFRL, all three of which are lower on the back of the numbers that they've declared. So you can see anything between 2 to 3% lower on all three of these counters. Then let's pull up something like a Jindal Poly, National Fertilizers, Jyoti CNC, all three of which are gaining and gaining significantly. PTC India has given up some of those gains, as you can see, but outside of that, National Fertilizers up 9%. Sequentially, the numbers look much better. Margins have improved for National Fertilizer when I'm looking at it sequentially. Jyoti CNC, what an amazing stellar set of numbers there. But let's also pull up the likes of Dishman and NMDC. They have done also fairly well. Jindal Poly as well, doing fairly well in trade today. So those are some names within the mid and small cap. Also, let me point out Concor and West Coast. Both of those are also doing well in trade. Where you're looking at Concor, which has signed an MOU with government of Bangladesh, and West Coast new facilities with regard to their optic fiber cable facilities coming on stream, which will of course aid some of the numbers there for Q4 for West Coast. So keep your eye out on both of those as well. Niraj.
Okay. Well, let's get in our guests to try and understand what to do in a scenario like this. Rajesh Palviya, SVP Technical and Derivatives Research at Axis Securities, and Vijay Chopra, MD and CEO, Enoch Ventures on the fundamentals. Gentlemen, thanks so much for taking the time out. Rajesh, I'll start off with you. In some sense, PSU is making a bit of a comeback today. To my mind, that stood out from amongst everything else, but it's not a bad market at the broader end of the spectrum. What is your trading approach this afternoon?
Yeah, good afternoon. So, short covering is happening in both the indices, Nifty, Bank Nifty. We have seen that, short covering started in previous session, and today also we have witnessed the short covering is going on. As Nifty is holding about 21,800, 850 marks. So that is the comfort zone for most of the index trader at this moment on the buying side. If it continues to hold about 21,850, then possibly we could see Nifty to take a attempt towards 21,950 zone also. That's the major supply zone at this moment based on the call concentration area. So that level we may see in today's session also towards the weekly option expiry. So Nifty may try to attempt toward 21,950 also. Bank Nifty is looking one notch better compared to Nifty and today's session, almost Bank Nifty is now continuously holding above 45,800 mark. That's the important level on the based on the put based concentration. So if it continues to hold above that level, then possibly we could see a breakout above 46,200 for Bank Nifty, and possibly Bank Nifty can inch up further higher to 46,600. That's the level we can see in today's session. Most of the PSU banks are participating. Even the HDFC Bank is also started recovering from its oversold trajectory. So that is also, giving some support to the Bank Nifty. So this is one added advantage to Bank Nifty in today's session.
Okay, in light of that, Rajesh, what are the stock recommendations for the afternoon?
So, Niraj, first stock is from PSU Bank, that is PNB. Stock is continuously holding above 120 level, and looking at the breakout on the medium-term, long-term structure, we believe that PNB can continue furthermore upside from the current level as whole PSU banking basket is moving up. So we picked up PNB for upside target of 135 to 140. One can buy this stock with stop loss of 122. And the second stock is from the power space, that is NTPC. Strong uptrend is going on in the stock. Continuously, stock is making higher top, higher bottom formation. After a brief corrective move, again, now stock is resuming its upward trajectory. Looking at overall structure, we believe that NTPC can continue furthermore upside from the current level. In previous session also, there was a long build-up. Again, continuity is there. So we expect target of 347, 350 for NTPC with stop loss of 333. And the third stock is Gujarat Pipavav Port. It's a mid-cap stock, and looking at the overall structure, stock managed to give breakout of its previous swing high on the daily chart. Almost 7-8 days consolidation range breakout is taking place. Falling trend line breakout is happening on the daily chart. So this breakout indicates that we can see a further more upside towards 205 to 210. So Gujarat Pipavav Port one can buy with stop loss of 186.
Very interesting, Rajesh, including Gujarat Pipavav, which is up 9.5% in trade today. So let me come across to Vijay. Vijay, firstly, welcome. Good having you here. Give us your views with regard to how you're looking at sectors at the moment. Which sectors are looking good to you from a valuation as well as from a fundamental perspective, structural?
Thanks for having me on the show. So today, the kind of bounce back we are seeing in the markets, it might be a pull-off from the oversold zone, but definitely I would say that markets, there are certain companies, certain stocks which are overvalued, and we should constantly keep on booking profits, because when the markets correct, the stock correct much more, like we have seen in the PSU space. So even today, as we talk, so there are certain sectors which I like. I think that metals should do well over a period of time. Companies related to solar, they should do well. I think that specialty chemicals and certain tech stocks, especially mid-cap IT, some of the companies have, I think that they have kind of bottomed out or bottoming out. So there I see a lot of opportunity. So if you allow me, there are a few companies I would like to recommend as well.
Sure, Vijay, and we get to the ideas as well, but can we first talk, Vijay, about some of the high flyers today in the session? Why is it that the oil and gas pack is moving the way it did? We'll talk about your stock ideas, but let's first talk about the ones which are standing out today. So Oil India up 12%. Yes, there is a brokerage note, but it's a substantial uptick. Some of the others, MRPL up 17%. Why is it that this is happening?
There are times when there is a certain interest in the funds or, in the HNIs or the big funds or the mutual funds or offshore funds. So I think that today it's just a sector rotation. We are seeing a major focus on oil and gas space. So, starting from Reliance, I think that, it has started and people are buying. The Reliance somehow, seemingly looks very good to me. So MRPL, Chennai Petro, all these companies are doing well. So I think that nothing much has happened in the sector, overnight. But yeah, just a sector rotation, I would say. And that's how the interest in the market, changes hands. So from one sector to the other sector, so people might have booked some profit out of the PSUs. The money would definitely, flow somewhere else. So it is flowing to the oil and gas sector. And I think that, markets are chasing good valuations as well. So there are a lot of companies which still have good valuations. They have good numbers under the belt, good profitability. So I think the refining companies are doing very well. The GRMs are quite stable. So, money has just, moved out from one sector to the other.
Yes, Vijay, that's right. And, we had an MK note earlier coming through with regard to Oil India. They've hiked their target price on Oil India by 50%, giving it a target price now of 670. What they are suggesting is that, firstly, their valuations as well as estimates were more conservative, so they've tweaked that. I'll come to the valuations, but let me first talk about what they are talking from a fundamental perspective. They are expecting the company to deliver on their growth target, and what they are seeing over the last few quarters is that the company is following their guidance, and which is one positive, and which is where MK seems to be getting some confidence from. What they are also suggesting is that the standalone refining peers are enjoying better valuations versus Oil India, and this is there is a correction warranted there, which is the other piece that's probably playing out. And they've basically raised their medium-term upstream estimates, and therefore what they've done is their FY24 to 26 EPS by 18 to 19%, thereby valuing Oil India at 670 rupees. A lot of that catch-up possibly has happened already, but there's still some way to go. If I can also have your views, Vijay, specifically with regard to Oil India, if any, before I go and take a quick technical view from Rajesh.
Excuse me. There was a definite valuation catch-up, which was in the waiting. I would say it's not recent. It has happened in the last 1 year. Look at MRPL, look at Chennai Petro. I clearly remember on one of the major leading business channels, I said that the profitability of Chennai Petro is more than the MCAP. So, and it was trading close to about 230 rupees. Today it is close to 900 rupees. So all these oil related companies, or refining companies, or maybe OMCs, there was a time there was a lot of undercutting happening. These companies were not able to make profits. But now, since the government has freed them to, and again, there's a huge differential they're earning every quarter. So look at what happened to BPCL, IOC, and HPCL. So similarly with OIL, I think that Oil India Limited has a valuation catch-up to do. It can comfortably go up to 600, 650. So I won't be surprised that we see these levels happening.
Understood. BPCL also being the second top gainer, or rather the second largest gainer on the Nifty 50 today. There you go, BPCL also up 5%. Rajesh, your views with regard to some of these OMC stocks, how are they looking on charts? What should one do in this market?
So Hersh, very strong buying action is happening in all these oil marketing company. If we talk about BPCL, this is the fourth consecutive month where we are seeing higher high-low formation. Very strong buying action is happening in the stocks. Stock managed to give most of the stocks like BPCL, HPCL, and IOC managed to give breakout on its long-term consolidation range on the monthly as well as on the yearly chart. That clearly shows that long-term trend has shifted, and this bullishness is likely to continue further. For BPCL, now one should trail their stop losses towards 625 until the stock is holding above those levels. Possibly we can see momentum can continue further, and possibly we can see target towards 720, 730 also on the BPCL, as overall structure is on the bullish side. Even if we talk about HPCL in the Petro, that stock is also looking promising. If we look at the monthly setup, stock managed to give breakout of a rounding bottom formation on the monthly chart, and it's a multi-year breakout is taking place. Stock managed to now cross this 2017 swing high. So that is a long-term breakout is happening on the stock. That clearly shows that now if stocks holds above 530, 540 level, then possibly we can see target towards 650 for HPCL. So very strong buying action is happening in whole oil and gas basket. So I think this sector is likely to continue further more upside in coming weeks also. So one can hold their long position and keep trailing the stop loss on the higher side. That's the strategy one can adopt at this moment for oil and gas sector.
Recovery in GRMs, auto fuel marketing margins, something that my colleague Varsha just messaged me, are the views that are coming in from some oil and gas analysts as well. Well, VPHP IOC clearly ruling the roost today. The other stock, which is actually the main one, and before we hit that break, we need to talk about M&M. We'll talk to the management at 3 p.m. today. But Tushar, who tracks this space closely, joins in to tell us, why is it that the analyst community has been so constructive post the day of the results? Tushar attended the press conference, asked the questions as well. So, Tushar, you heard what the management said. You've seen what the brokerages are saying. Juxtapose the two.
So thank you, Niraj, for that. So essentially what the story is a day after the earnings is that this is an SUV story, not a tractor story. And that's quite a departure from, say, a couple of years ago when Mahindra's tractor sales were actually outpacing SUVs. So what is the basic sense that we are getting from brokerages is that the jump in the share price that we see today, that's about more than 7% to a record high, is actually justified because at least two brokerages have indicated a double-digit upside for the stock going ahead. First among them is Bernstein, which has a 13% upside on the stock with a target price at 1,880. Compared to the current market price, at least the previous close, was 1,657. Bernstein also says that tractors will remain the weak point in Q4, with FY24 seeing a 5% decline in overall volumes. The guidance, the company in its con call guided for a mid to high teens growth in the SUV volumes. That will actually be industry beating, which will be around 10 to 12%. So essentially, we are looking at M&M building on its market leader position as far as revenue market share is concerned. Also remember, in the Q3, it clocked its highest quarterly volume that the company has seen so far. Margins will also continue improving sequentially, Bernstein said, because of the improving mix. We are selling more costlier SUVs over and over, as the numbers suggest. Secondly, the stock is still fairly valued. According to Motilal Oswal, the M&M's implied core PE stands at about 16.8 times for FY24 and about 15.2 times for FY25, which is still attractive as compared to peers like Maruti Suzuki or Tata Motors, which have also seen a run-up in their prices. So as far as Motilal Oswal is concerned, it's looking at a target price of 2,005 rupees, which is a 21% upside. Q3 was operationally in line, but the last three numbers are very important. That is from the FY23-26. Motilal also expects that the company will report a CAGR of 12% in revenue in FY23-26. EBITDA will clock a CAGR of 15%. Net profit will have a CAGR of 16%. So the next 3 years look very good for M&M. Okay, well, interesting. So a higher contribution on the EBITDA front and therefore a better bottom line growth than the top line growth. Tushar, thanks for that. Well, of course, you'll hear from the management. We'll ask him this question at about 3 p.m. when Anisha joins in. We need to slip into a break. Stay tuned. We'll talk more with our guests and, of course, get in the CEO of, Group CEO of M&M on the other side.
Back with India market close right here on NDTV Profit. Now, we spoke about how PSUs have done very well. You could argue that power has done very well too, because across the board, from power grid to NTPC to the Inoxes of the world, that whole value chain has done extremely well for itself. I believe Morgan Stanley has come out with a note on some of these. Let's go across to Hersh to try and understand what is the rationale that they're putting out there and what are the stocks that they seem to be constructive on. Hersh, take it away.
Well, yes, Niraj. So let me first start off with what Morgan Stanley is saying with regard to the sector as a whole. First off, they are suggesting that the power demand for both FY23 and 24 has been ahead of what the government has projected, and therefore the kind of supply that's come through has been lesser than the kind of demand that actually translated in both FY23 and 24. What has driven this demand? Well, what they are suggesting is manufacturing as well as the use of appliances by the common man is what is driving power demand at the moment. And there's no doubt on either of these because there's been a huge thrust on manufacturing, and that seems to be playing out on power. Now, the situation is expected or was expected to worsen, and that's also because of delays that have happened with regard to capacity additions being insufficient. Now, in terms of the specific names, and yes, there's renewable capacity also coming through, and renewable capacity will take more time, and therefore they've booted up and they've also started leaning on thermal capacity now. So who are they overweight on? Who is Morgan Stanley overweight on? NTPC Power Grid. NTPC, of course, the largest power supplier, Power Grid, the largest power transporter, no point in having supply without transport. And then you have Renew Energy, which Morgan Stanley continues to be overweight on. They have upgraded BHEL from to equal weight. So that's one big positive for BHEL. And you can see it's moved fairly well. It was at the 205 mark at the start of this week. It's moved fairly well again. It's come up to that 220 level, and they are underweight Tata Power and Torrent Power. They feel that some of these have played out in a significant fashion, and hence they are underweight these two.
Okay, but well, wondering, Vijay, if you believe that some of these have played out already, or it's a long runway and people can stay invested.
First of all, that it's a long runway. When India is talking about becoming a superpower in 2047, the finance minister said it's going to be the Amrit Kal, and a lot is going to unfold. So I think that we have just started, or it is the beginning, and we're going to see a lot of things unfold. I think India is a developing country and going towards being developed. Look at what has happened in the EV space. So we were talking about demand. Lot of action has happened in the cities and even in the rural areas where there was no electricity earlier. So companies like REC have done a great job. I think that most of the Indian rural diaspora have been connected with electricity. There are very, very few villages now which do not have electricity connection. So this demand definitely, whether it's urban, rural, industrial, it is going to increase. Plus there's going to be an add-on of EVs. Now, Prime Minister Modi has recently announced that there are going to be 1 crore households having solar rooftops. So, this electricity is not going to be used entirely by the households. It is going to be flowed back into the, into the system, and it's going to be used eventually. So, primarily, the government is working upon using the real estate for free. And people will definitely, not use the entire electricity produced because we have a good 9 to 10 months of sunlight, and a lot of electricity would be produced. So I think that all these things would add up to the growth of the ancillary industry around power, and of course power distributors, power generators, and yes, in the last few years, a lot of effort has been made regarding the smart metering. Earlier, there was a lot of leakage. There was a lot of theft around power, and these companies, all the power distributors and power companies, were reeling under a lot of losses. So, with smart metering coming in, and there are lakhs and lakhs of smart meters which are still to be installed. Companies like Genius Power and others who are already involved in this business So I think there's a lot to happen. We have just started. So when this leakage stops, this money starts flowing into the system. There are rooftop solar, provisions. So the entire pressure which is there on the grid is going to loosen a bit, and we're going to grow left, right, and center. Of course, the EV thing is going to take it further as well. So I think that we have just started. Number two, regarding getting into the stocks right now or wait for the correction, for some more correction. I don't think that the correction is over. And long-term players should be invested. Traders, be very cautious. We'll have sharp corrections in this journey way up. So I would recommend that long-term players stay invested. NTPC, Power Grid, PTC are great companies to have in a portfolio. Even Tata Power. Don't panic if there is a 10-20% correction. Don't panic at all. These companies are going to be potential multi-baggers of future.
Absolutely. Multi-baggers of the future, quite bullish on that one, but suggesting that investors wait for a bit of correction. Thanks for that, Vijay. Let's slip into a very short break. You have M&M on the other side, along with top buy and sell recommendations post that. Stay tuned. Welcome back. You're watching India Market Close here on NDTV Profit. You have markets largely trading closer to the day's high than the low, so not much to complain about there. You can see the graph. It was a tight band in which we were trading, and now we've kind of, upped it a level, around 1/3% higher, at least for the benchmark. Let me, though, point out one stock which came to focus for me, as well as having a chat with Niraj as well on this one. ICICI Lombard, if we can pull up the 1-month chart on that one, the stock is up 20% in the last month or so. And, essentially, the question is, has it turned a corner? Because this is one of the best insurers, general insurers in the country on the private sector side of things. But it has been struggling over the last 3 to 4 years, especially on the auto side. So let me first take it to Vijay. Vijay, do you track this one at all? And could one say that this has turned a corner? Because I tell you what, this was trading around the 1450 kind of price point pre-COVID. You're still getting largely COVID prices on this one. How should one look at it, if at all you track it? Vijay, I think you're on mute.
Extremely sorry.
Sure.
Yeah, so definitely the public sector insurers have done very well, the general insurance companies. And I would second your opinion when you say that, it's almost there. It's been 3 years, nothing has happened. But nothing has happened with a lot of companies. Look at HDFC Bank, look at Kotak, and there are scores of companies which have not done anything. But this doesn't mean the company is bad. So I would say, there are certain company stocks which require a lot of patience. I think that, if this company stabilizes around 1600 and consolidates around here, it has a good case where it can go up to even 2000. So the company has grown. It's not like the company hasn't grown, the financials haven't grown, but we have not seen the reflection in the stock prices. So I think that, a lot of insurers have, seen a lot of losses during the last few years. But I think that once it consolidates around 1600, and so it's a long haul play. I won't say it's a trader's stock at all. But in the long haul, I think that it can definitely go to 2000. So I'm bullish on ICICI GI. People are now waking up to the realities of insurance. India was a terribly underinsured country, whether it's life insurance or general insurance. But now businesses, companies, and even individuals are waking up. Legally also, it's now mandatory to have insurance in a lot of cases, especially vehicles. So I think that, one should wait before, no need to dump it. People who are holding, keep on holding. I think that slowly and steadily it will go up to 2000.
Sure. Point taken, Vijay. Rajesh, I'll come to you on that one, but I'm just being told that Niraj is ready with Anish Shah, who's the CEO, MD of M&M. So let's cut straight to that conversation.
Hit record highs today. We get in Dr. Anish Shah to talk about what went behind the commentary that came in from their end, and what is his view, more importantly, on what the next 12 to 24 months hold in store, in light of the fact that we've received mixed commentary from multiple other corporates about what growth could be like over the next 12 months. Dr. Shah, good having you. Thanks for taking the time out. I would like to divide this chat, one into M&M and two into how do you see the world from your landscape. Though I know we spoke about it just recently in January, but from there until now, some other comments have come in from some other promoters as well. Can I think of what you've done and what you will do at M&M over the next 12 months in the auto segment as a tale of two ends, if you will, that tractors may not necessarily do that well, but the SUV segment or the cars or the passenger vehicle segment is really striking the right chords.
So Niraj, it's a pleasure to be here with you, and I would actually expand what you said, because for us it's really a tale of multiple businesses doing extremely well altogether. Even our farm business has done very well. Yes, the farm industry is flat right now versus the prior year. We expect it to go down a little further, so it will close the year at -5%. But we've gained 80 basis points of market share. And when a market share is above 40%, it's not easy to gain 80 basis points. And that's allowed us to keep profitability high. Margins have continued to be high. And overall, the farm business contributes very well to our profitability. Auto has clearly seen a lot of progress over the last few years, coming out of the products that we've delivered, which truly are world-class products and have been beating the competition hands down. So that's been a big plus for us. But beyond that, as we look at a number of other businesses, Mahindra Finance is very well back on track. We look at our growth gems, they are delivering at a very high level. Our solar business has introduced or listed India's largest renewables InvIT and is set up for significant growth. We had planned for a 5x growth in the next 5 years. We're now evaluating whether we can grow 10x in the next 5 years or somewhere between 5 and 10. And multiple other growth gems also are firing on all cylinders. So today for us, it's really about pure execution. It's creating plans that were realistic, at the same time aggressive, and then executing on those plans.
Interesting you say that. I mean, execution would be the primary driver when demand will not be a concern. I hear some of the other CEOs / promoters come in recent past. Baba Kalyani and Amit Kalyani spoke on air. Some others have said that too. Though I must agree there's been mixed commentary around what the state of demand could be in India and the world when Europe and China are looking cagey. Now, you've spoken about this in the past, but I'd love to for you to share some light if you are concerned about that. And would you believe that M&M and different businesses could still perform even if the growth numbers don't look that great in those areas of the world?
So first, we feel India is very well positioned. And we can talk in more detail on the questions you have specifically on India. But the rest of the world also is looking better than it did a year ago. Yes, it is going through some stress. We do expect some more concerns. Inflation's not completely gone away as yet. Geopolitical issues are still alive and kicking and do end up bothering us from time to time, as we've seen more recently from the Red Sea attacks. So all of those uncertainties are out there. But we've learned to live with those uncertainties. We've learned to, in some ways, find solutions to them and thrive in them. After having gone through COVID, the level of confidence on that is much higher. So that, combined with the power we see in India today, in the Indian economy, I think positions us really well.
Okay, so sorry, I'm hearing you say that you don't seem to be perturbed by growth pangs that some other people might be perturbed with, because I heard you say that the world is actually a better place than what it was 12 months ago, at least from your perspective and your business.
That's correct, Niraj. We are not perturbed by it. We will live with those uncertainties, work through them. As I said, the India market is strong, and beyond the India market, the products that we have and the businesses that we have are very well positioned, and that's really what's driving the growth for us.
A couple of questions on the auto piece. Now, the volume Q3 volumes on the auto side were very, very strong. I believe you've said that Q4 SUV volumes are likely to be flattish, though, and at the same point of time, I also see that you mentioned that in case of certain models like XUV 700, for example, order bookings had gone down because of, one, the waiting period, two, people got confused that XUV is not across the price range but only at the upper end. So help us understand, is it a demand-led piece which is making flat volumes, or is it firmly on the supply side and the perception which may change very swiftly in quarter 4 or maybe quarter 1 of FY25?
So we have more than doubled our capacity. We were at 22,000 not so long ago, 25 then, and then we had laid out a path to get to 29,000 2 years ago, 39,000 last year, and 49,000 by the end of this fiscal year. We're at 44,000 today, and the increase in capacity is really what has helped us bring down the wait times and bring down the order book. At the same time, the order book today is 225,000. And as we told the analysts as well, we would like to see it lower, not at that higher level, because a high order book means long wait times for our consumers. And we are seeing very good demand, we are seeing very good growth numbers, and the challenge for us is how can we continue to ramp up capacity to bring that order book down further. So the order book has come down largely because of our capacity increases, and as we go forward, we would want to continue bringing that down.
Okay, and 2025 presumably, or 2024, excuse me, presumably will be an exciting year, or the next 18 months could be exciting because I believe there are some new launches happening, some unthought of models a few years ago maybe hitting the Indian landscape from your end as well. So talk to us about two things, Dr. Shah. One, how exciting would be these launches, and what could it mean for volumes, part one. And two, you've chosen an interesting path of being on EVs versus hybrid. Some other companies are doing completely the opposite, if you will, in a predominant way. Tell us your thoughts on the increasing competition in the EV landscape, particularly this whole conversation around global companies, Tesla, what have you, might also making a foray into the Indian markets.
So you got lots of questions there, Niraj. So let me take them one after the other.
Yeah.
First, on our excitement, we've got the 5-door. Go ahead.
No, I'm saying so sorry for too many questions, but please humor me.
No, that's fine. First, on the excitement for this year, we have the 5-door Thar, and more importantly, beyond that, we have a born electric SUVs being launched. These are going to be 6 SUVs that are coming up. We had 5 initially. We've added 1 more, and they will start launching this year over the next 12 to 18 months. And these are a fantastic set of cars. These, I would say, are going to compete with the best in the world, and our hope is that they will move ahead of the best in the world as well. I've test driven 3 of them. They've come out really well, and we're looking forward to that launch. So that's going to be a big deal for us. The second question that you had was on hybrid versus EV. Now, hybrid is something that's really an extension of ICE. The emissions are the same, fuel efficiency is slightly better, the cost is higher than ICE. We had a choice to make whether to do hybrid and EV or whether to go for EV only, and we chose EV. We can always go back to hybrid if consumers want that. That's not going to be difficult to do. But EV is the technology for the future, because that is a dramatic change. The vehicles are far better. The emissions are non-existent. You've got a much lower operating cost. There will be certain hiccups as the EV ecosystem develops, because you need to have a charging ecosystem that makes it as easy to create a charge as it is to fill petrol or diesel today. And that will take some time, and which is why governments around the world are incentivizing EV, because they see the benefits of it at the end. You have countries like Norway, which are 90% plus EV right now, and they've gone through all of those challenges, and many other countries are going through them at this point in time. So for us, we feel that very strong EV portfolio is the path for the future. At the same time, we are focusing on a strong ICE portfolio, and if the consumer wants hybrid, we will bring that in. But as I said, hybrid is really an extension of ICE. And then to get to your third question on what we are hearing around imports, etc. We've said this before. We have a very clear message on this, that if you believe in India, then make in India, invest in India. It is actually very unfair for consumers if you import from outside without a commitment to the market, because the consumer doesn't know, are you going to exit tomorrow? And when a consumer buys a vehicle, they want that vehicle for the long term. They want the manufacturer to be there for the long term to support them in the choice of that vehicle. India is in a very strong position right now, and will continue to get even stronger. And therefore, the Make in India initiative that the government has launched is something that we support wholeheartedly. And we feel that companies that can make in India, do research in India, develop products for the world, will make India only stronger, and which is what we would completely encourage. At Mahindra, we have benefited from competition. The products we make today are far better than the products we made 10 or 15 or 20 years ago. And that's because we've evolved with competition here. So we welcome competition, and we are happy to compete with them. As I said, we are creating world-class products here. So therefore, our message is, if you believe in India, then make in India.
Message.
That is Anish Shah, and in conversation with Niraj Shah with regard to M&M and its numbers, the stock up and away 6.5% in trade. Let me go to Rajesh. Rajesh, your views with regard to M&M on charts. It's off charts today at least, but what's your sense?
So very strong momentum is taking place in the stock today, and now stock is approaching to its multiple supply zone, and the previous swing high is now penetrated by the today's price action. So looking at the overall structure, we believe that if stocks closes above 1775, 1780 zone, then possibly we can see this rally can continue further higher. 1850 to 1900 could be the possible target in the continuation of this uptrend. So overall, structure is bullish across all time frame. On the near term, stock is gaining strength now. Above 1780, we are projecting target towards 1850 to 1900. One can hold their long position at this moment. We expect this breakout to happen. Keep your stop loss at this moment around 1735 to hold your long position.
Wow, bullish on M&M there, Rajesh. Vijay, your view? The consensus currently in the analyst community seems to be that M&M now has a base which has changed from CV tractor to passenger vehicles, and on that base they'll build the tractor traction as well as margin as well as EBITDA. How do you look at it from a fundamental perspective, and how do you look at valuations? Because on a valuation front as well, looking at it trading well above its 5-year average.
I hope you remember that Mahindra took over Sanyong Motors in Korea, and it was a few years back, and then they were not able to pull it off properly, and it was making losses. So they actually shelved it. But I think that from the times from where they used to make vehicles which are primarily pickup trucks, and they were used for rugged terrains like villages and mountains. For the first time, and when I personally saw XUV 700, I was quite impressed with the kind of vision Anand Mahindra is carrying. Now, definitely, go to any Mahindra showroom, there's a waiting line, and this is a problem also. This is a problem with most of the luxury cars. You want to buy a BMW or a Mercedes or even a Toyota Innova or a hybrid car. So there's a waiting line of 2 to 3 months. I don't know. This is becoming more and more a norm in the premium segment. But I think that M&M has reinvented itself, and I would rather use the word that they have metamorphosed into a butterfly, which is much more better to see. Earlier, the vehicles they used to make, they were not eye-pleasing at all. Now, look at a XUV 700 top model, which boasts of certain features which are at par with the likes of BMWs and even Mercedes. So, at that price point, if they are offering wonderful product, so I think that they have done a fantastic job. The management is talking about EVs, and again metamorphosing into a new age company where they have a lot of EV offering as well, apart from the design and the features they're offering. So I'm quite happy with the way Mahindra has come out to be in the last 2-3 years. So there's a reflection in the stock price as well. It was reeling around 900, 1,000 almost, a year or ago, and here you are at a 70% growth in YOY in the stock price. I think that it's again a long haul stock. So apart from the rural play where they're very, very strong in tractors, they also have a offering for the urban customer and the new age urban customer, which primarily prefers SUVs over sedan cars. So I would say M&M is a great company. The shape looks good. The valuations are not at all stretched as compared to the peers. I think that it can go up to 2,000. Keep on holding the stock. And as the management says, they're coming up with newer products. I'm very hopeful they are going to be eye-pleasing to the masses of the country.
Well, bullish on technical and fundamental there, M&M. But, Rajesh, let me come back to you with regard to those power stocks which we missed taking your views on. On charts, some of these stocks have now run up substantially. How are they looking on charts? What should viewers do?
NTPC, we have...
Sorry, you were on mute. Yeah, briefly. Yes, please go ahead.
So NTPC that I have already mentioned that looks good at this moment from the power space. I think that stock is likely to continue. Tata Power, after the corrective move, it's now trading near to its 20-day moving average. So I think that stock is also looking attractive after this corrective move. Looking at the overall structure for Tata Power, it's again, available at a very correct level in this correction. So I think one can look to buy Tata Power also with stop loss of 365. Upside target we expect for the stock towards 440, 450 on a positional basis. So NTPC and Tata Power, these two stocks are looking promising from that pack.
Understood. The other one that's been in focus today is NMDC. If you can pull up the intraday chart for that. And what you'll see is 5% uptake on NMDC. And what a journey this one has had. It was at 65 rupees a share pre the demerger. And now we're seeing 250 rupees almost on the counter. Days high 250 plus. Vijay, what has changed so fundamentally and so drastically in something like an NMDC, and how are valuations looking now to you?
Well, I think that most of the public sector stocks which we talk about, especially the mining ones, there was a lot of deep value. NMDC still is available at a PE of 12. So I think that it's still, as compared to the peers, private peers, look at Glencore, valuation. So I think that if we do an apple-to-apple comparison, NMDC should trade at about 500, 600, if you compare it with the international peers. So I think there's a deep value there. And the demerger of Nagarnar steel plant, where NMDC had spent close to 18,000 crores in developing that, I think that even post the demerger, Nagarnar is again a great investment, so to say. Because there are many private players which are trying or eyeing to take over this asset. So I think that NMDC Steel is also a great company to hold. Even NMDC at these levels, long-term players don't worry at all. Somebody wants to get into the stock, wait for about 220 levels. That would be a lovely level to get into NMDC. So I think the valuations are still not stretched. There's a lot of valuation catch-up in the the mining companies. So NMDC is one of my favorite stocks, has been and would be until I see the valuation stretch. So valuations are quite okay. Wait for a correction, get into the stock and stay there.
Amongst the other stocks that have done well, Emphasis out of the blue is about 6% higher. It didn't come out at the best of quarters really, but the stock has had a good run today on on higher than average volumes. So Rajesh, any thoughts on Emphasis 2704 currently?
Yeah, very strong run up in today's session, and almost now stock is managed to give breakout of almost 15-20 days consolidation. So that seems to be looking very interesting after this today's move. Now if stocks holds about 2660, 2670 mark, then possibly this momentum can exceed further and we can see target towards 2800, 2840 kind of level also. Very strong buying action is taking place in the stock. Stock is holding about 20-day, 50-day moving average. That also adding up the strength on the near term as well as on the short term structure. So those who have already bought the stock can hold their position. 2660 should be your stop loss. Upside target 2840.
And Rajesh, your BTST recommendations while we are at it.
So first stock is from banking space, that is Federal Bank is looking very promising. Long built up is there. Stock is now approaching to its multiple supply zone. Looking at the overall structure, we believe that this stock can deliver good return in coming trading session. 168 to 170 is the immediate target which we are expecting. One can buy with stop loss of 153. Second stock is Polycab. Very strong buying action in last half an hour of trade. Stock now managed to give breakout of its contracting triangle on the daily chart. If you look at the last 15-20 days behavior. So very strong buying action is taking place. Stock is now penetrating to its 200-day moving average. Looking at the buying action, we believe this momentum can extend. 4650 to 4700 could be the immediate target on Polycab. One can buy with stop loss of 45.40. And the third stock is NOSIL. That stock is also looking very promising. Very strong buying action is taking place. So NOSIL can be a buy for upside target of 295. Keep your stop loss at 275.
Right, Vijay, if I can come to you, again, very interesting play. Federal Bank, Rajesh suggested it for BTST. How do you look at it fundamentally? If just back of the hand math, this is trading at roughly 1.4 times price to book, if I'm not wrong. It's a stock where, or it's a company where there has been, or rather NDTV Profit exclusively has broken news suggesting that there is a possibility KVS Manian of Kotak Bank senior management, who heads wholesale banking for Kotak, has joined in or may join in as managing director. Shalini Warrior obviously there already. Do you think that this looks good among the mid and the small tier banks?
Well, banking is a very cluttered space now. Doing profits is such a Herculean task with all these small finance banks and all kinds of banking licenses which have been doled out. They are definitely getting a lot of competition from fintech. Leave Paytm aside, but again, we have ESAB, small finance bank. We have Jana small finance bank. There are scores of small finance banks which have come up and cluttered the market. So I think that management change, yes, positives are there. There might be certain strategic changes. We saw a lot happening in IDFC Bank post where they joined. But I think that Federal Bank can do good. I don't see that it's a multi-bagger, but yes, it can go up to maybe 200 odd. And then probably if there are certain fundamentals which change drastically, then probably we can take a look. But yes, as of now, even on the charts, technically, fundamentally, as far as the numbers are concerned, it looks good. Can go to 200.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us on the show today. Really appreciate your time. The market's just about to close and, close well. You have to admit 2 days on a trot now. We haven't had a bad day. We're back to kissing distance of 22,000. So that's part one. But more importantly, today is yet another day where the broader end of the spectrum has done much better. So while you see the Sensex and the Nifty do well, it is the mid caps and the small caps which have done well. And by the way, this also kind of camouflages what the real powerful move at the broader end of the spectrum has been. If you just look at the BSE 500 index gainers, or if you look at BSE small cap gainers, you would see the kind of gains and the moves that have happened in an MRPL. We spoke about an Emphasis, we spoke about Oil India. I mean, those stocks have had a really, really powerful rally. The number of stocks at 52-week highs is also very large, so that is good. And if you pull up the heat map and on the index, you will see that some stocks have moved like the way mid-caps move. I mean, M&M is 7% higher, BPCL, NTPC, Power Grid, ONGC, SBI, Coal India. That's a whole clutch of PSU names which have done well. Before I give it to Hersh, we should pull up the PSE ETF ones as well. But on the weak side, it is FMCG which has sulked really badly in the session today. Can we just pull up the PSE ETF chart if we can? Because I think that will show you how strong the moves have been. But while we wait for that, the other aspect to notice is that IT is not sulking too much in the session today. Infy is about 0.83, Wipro about 0.6. So net, not a bad day to go home with. But Hersh, like I was saying, the broad end of the spectrum is the one which has got this really powerful move in the session today.
Well, yes, Niraj, that's where all the action, at least since the start of the day is, while we slowly went towards the larger caps. But yes, the mid caps and the small caps is where the action is. Let me pull up the Nifty mid cap. There you go, 1% higher on the Nifty mid cap. And among that, the top gainers, MRPL. You have something like an LLC India, which is up nearly 8%. You have Aegis Chemicals up around 10% as well among the gainers. Among the losers, you have the likes of an LG, a Jyoti Labs, Credit Access, all of which down just about 2 to 3.5% odd. So those are on the mid cap side of things. On the small cap, OIL, that's the one in focus. Top gainer on the small cap index, sorry, my apologies, on the mid cap index, that one 12.5% higher. Torrent Power 7.5%, Polycab 6% of gains, doing well in trade again today. Z, Paytm, Macrotech are among the losers. Z is down just about 6+%, Paytm down 5%. Loda Macrotech, which is down 3.3% odd. But that's the way we'll probably be going home at close today. In terms of a quick sectoral check, if I may, Nifty Auto has done particularly well. And we have the Nifty PSU Bank, which has gone up 3%, and Nifty Energy has gone home with 2+% of gains. But with that, we're completely out of time on this edition of the India Market Close. From Niraj, myself, everyone who puts the show together, thanks so much for watching. Have a great evening, and we'll see you tomorrow morning for India Market Open.
The heat map. 500 gainers and losers? Or no? वो जो आप सेक्टोरल इंडेक्स डालते हो ना वो tell somebody to get it added. BSE 500 है? Okay. Do you have BSE? Okay, I get your point. Okay, do you have Nifty PS? Okay, do you have Nifty PSU Bank then? Okay, brilliant. And do you have Nifty Power? Energy. Oh, perfect. Yeah, perfect. So we'll show these two, and then we'll end with those 6 stocks that I sent you as which are the 52-week highs. I'll send you on WhatsApp. Can you show them? 1, 2, 3 and 1, 2, 3, and we can wrap. We don't have volumes, do we? We don't have volumes. No. We don't have the market-wide volumes. No problem.